So the first coin project we'll take a look at and analyze is Bitcoin. This is the leading cryptocurrency at this current time, so we'll start off with the leader of the pack. So to recap, Bitcoin is a cryptocurrency that can function as a digital form of cash and or as a store of wealth, similar to a digital version of gold. The Bitcoin main website is bitcoin.org. And Bitcoin is a consensus network that allows for the creation of a payment system, a new payment system, and a digital version of money. It's the first cryptocurrency ever created and has become widely used around the world over the past decade. Its market cap 3 months ago was about $913 billion. And compared to today, at this current time in late November, the market cap is currently $1.09 trillion. So that is still a rather dramatic increase over time, considering the size of the asset. To gain another $100 to $150 billion in 3 months is still no small feat. You see the volume in a 24-hour period is about $34 billion. About $34 billion is traded and transacted in a 24-hour period. Its circulating supply is about 18 million Bitcoin, so 18,888,237 Bitcoin. And that figure accounts for about 90% of the total Bitcoin that will ever be created. In case you forgot, there will only ever be 21 million Bitcoin ever in existence. So about 18 million, almost 19 million of that total 21 million is now in circulation. Its max supply is 21 million Bitcoin. And the total supply in existence right now is 18,888,237 Bitcoin, equivalent to the circulating supply. So there, as we can see, particularly in this project, there is no difference between the circulating supply and the total supply. It is also considered a limited token supply, as there will only be 21 million Bitcoin ever in existence. Every coin project is different. Some of them are unlimited. In Bitcoin's case, one of its major appeals is that it is a fixed or limited token supply. There will only be 21 million Bitcoin ever in creation. We also see that its consensus model is proof of work, also known as crypto mining. It's considered a store of value or a payment coin. And some associated projects include Bitcoin Cash, BCH, and Litecoin, LTC. It was released in January 2008 or 2009. I apologize. The white paper was released in 2008. The founding member or founding members of the Bitcoin project, as we know, is Satoshi Nakamoto. This is an anonymous persona. It could be a single person or a group of people. Nobody knows for sure. And finally, you can find the Bitcoin white paper at bitcoin.org. As you see, we have the link in the PowerPoint. So if you're interested, be sure to check that out, read from it, take a look at the various examples, and particularly the language and the foresight that Satoshi Nakamoto had way back in 2008 when the white paper was published, to see the demand and the need for a decentralized payment network that can't be controlled or manipulated by third parties. Now moving on to some charts. So let's take a look at some various figures regarding Bitcoin's price development over its extension or the time of its existence. So particularly here is an all-time price chart of Bitcoin's price action. As we could see, it started very low. The very lowest reading was about $140. Obviously, it was worth cents back in 2009, 2010, 2011. It was really worth just pennies. And then over the course of time, really has tremendously increased in value. we see particularly here this first noticeable hump. Even before this, we see the 2013 crypto market cycle. We start to see a little bit of a nudge right there when Bitcoin rose to about $300, give or take. Finally, price settled down up until about 2017. We see one of the first major cycles, if not the first popular mainstream cycle, where a lot of people were buying into Bitcoin. Price eventually fell down. We saw a little bit of a cycle going into 2019, and then finally the 2020 bull run into 2021. Now, I'd like for you to try to take a look at this chart pattern with this peak, valley, peak, valley, peak. And we're going to take a look next at Bitcoin's market cap chart. And essentially, this is the chart regarding the amount of money vested into Bitcoin at a given time. So as we see, for the most part, it's a fairly similar chart to Bitcoin's price chart, where we see the slight hump around 2013, rather stagnant price movement up until about 2017, where Bitcoin reached an all-time high at that point of about $350, almost $400 billion in just Bitcoin. Following that, we see a fall, rather valley. We see a little bit of a peak here into 2019, a valley and a fall again. And then finally into 2020 and 2021, we see tremendous growth. Taking a look at Bitcoin, particularly focusing in on the monthly chart, the monthly price movement. So this is from the beginning of the month, early October, going towards the end into late November. We see Bitcoin happen to reach new all-time highs, about 69,000, and overall has diminished. And the important thing to keep in track is that cycles go up and cycles come down. So eventually this will go up to in time. We see that matched with Bitcoin's market cap analysis as well. Fairly similar chart. Once again, we see a peak with Bitcoin reaching a $1.3 trillion market cap around the same time that Bitcoin reached new all-time highs of $67,000, $68,000, $69,000 per Bitcoin. And as Bitcoin's price went down, we also see Bitcoin's market cap goes down. So it can fairly be safe to say that it's useful to track a coin's market cap, because it's essentially a measurement of how much money is involved, how much money is invested into a coin project at a given time. Moving on to Bitcoin's white paper. So here are some examples of Bitcoin's white paper. This was released in 2008 on the internet, and it's titled Bitcoin, a peer-to-peer electronic cash system. As we see here, it was authored by Satoshi Nakamoto, Satoshi's email, and the bitcoin.org website. Now, some particular highlights that I found interesting here is within the introduction, we see that Satoshi stated that what is needed is an electronic payment system based on a cryptographic proof instead of trust, allowing two willing parties to transact directly with one another without the need for a trusted third party. Transactions that are computationally impractical to reverse would protect sellers from fraud, and routine escrow mechanisms could easily be implemented to protect buyers. So at this time, back in 2008, 2009, Satoshi already had the foresight to see that there will be a growing need for this sort of electronic payment system that will be based on cryptographic proof instead of just simply trusting the banks to do right on your part, trusting any other third party to do right on your part. Bitcoin isn't based on trust, it's based on cryptographic proofs and decentralization, where you don't necessarily have to trust the other person that you're transacting with. And here we see some basic models of Bitcoin transactions. There's already schematics for public keys and private keys, hash signatures and private keys used to check signatures and to verify and sign things. And the recipient would be able to verify that the owner or the correct sender was the one who's signing the transaction as well. We also see Satoshi schematic for the proof of work system, the mining system, where we would see how blocks would be added to the blockchain. So we see a block of transactions, transactional data, and it essentially being digitally signed with the previous hash of the block before it. And here we see the process essentially replicated again, and this would occur once again within the next block. We also see information on new nodes and also the incentives to participate in such a system. So Satoshi called that the incentive can also be funded with transactional fees. So these transactional fees, when you send money on the Bitcoin network, essentially is the incentive for people to help process transactions and quote unquote mine Bitcoin, which is essentially just helping provide computing power to process the transactions when you